Hello, this is the Chartprofit video. We're about 1 hour into the trading day on Friday the 1st of July. This is from the pre-open today. We've seen 3 days from Tuesday, Wednesday, Thursday where we've marked aggressive buying. That's the green at the top of the bar here. The buyers have been active. You can see these positive numbers here on each one. And the value areas have been progressively higher, so this is effective, significant buying. Wednesday and Thursday's value areas printed above this level, 2041, which is the point of control of the current distribution. But up here at 2087, we have the major. As I said yesterday, the resistance on this chart is now the major point of control at 2087. And we kind of stalled at that price. Sellers will often enter here at a major point of control when it's being probed from below. But as you can see on this live hourly chart here, the emini is printing above 2087. This is strong price location here. So quite a remarkable recovery from the decline that we saw at the end of last week and early this week from the post-Brexit fallout, and we've had 3 days now of really aggressive, significant buying. You see on the breadth indicators for New York through Thursday, percentage of stocks greater than their 50-day moving average in my New York list, back above 50. This indicator here, the net new highs 25, 5-day moving average indicator below 0 still. So that gives us a neutral here on the breadth indicator, the breadth line on the pulse chart, and the price oscillator at the bottom here just turning back up as of yesterday. Here's the green bars at the top here indicating that buying off the emini profile. We're looking at the spider chart, and the level here at 205.40. That's the point of control, and we're back above that. So a much stronger looking chart than the end of last week. Still want the technicals at the bottom here to improve slightly, but as long as we hold 205.40 on the spider, again it's a strong price location. And if we look at the live chart for the spider right now on the daily bar, here's the major down here, 205.40, and previously the major point of control, the equivalent of the 2087, which is the current on the emini, is 209.90, and we're actually printing above that level as well. But you can see from the acceleration here from this low, fierce comeback all the way back to this level. Now on the emini we obviously have more data to deal with, more or less trades 24 hours a day, so the 2087 level I think is primary importance, certainly is on the emini, and therefore I would say that this is an important level at 209.90. So if the spider can hold above that going into next week, it's a very strong market. The diamonds today printing well above 176.50, which is its 2-year. Russell 2000 ETF IWM recovering back above its major at 115.35 today. Price doing this, holding and consolidating here would be a powerful pattern. And the Qs recovering back above 105.13. So for me, these US indices, the US market, relatively really strong in the longer term, and in the shorter term, certainly buyers stepping in to take advantage of that opportunity earlier in the week, which is usually a good sign. Looking here at the Dax chart, the German Dax, long term relatively a really weak chart, and we have retraced some of the fall from last week, and it's managed to get itself in a better price location. Now what's happened here is the major point of control, which was previously at 97.40, has dipped slightly just in the last couple of days down to 96.60. So that's the level I'm now monitoring. So as long as price can hold above here going into next week, this chart also in a strong price location. Quick look at my part of the world, the United Kingdom, where all the trouble started last week. This is the Footsie 100, the large cap index. You can see we've had this major down here at 58.70 for certainly for the whole of the period that you see on this chart. It was actually generated before this period, so this is a major support, and you can see there was just a very brief probe on the 1 day there, and we've had a remarkable rally back. UK investors deciding that the large caps are less susceptible to the weak pound, and we've seen a remarkable recovery up to a multi-month high. Let me also show you Footsie futures chart, and this is different. Again, like the spider and the emini, we've got the Footsie 100 index futures here. Quite possibly a more reliable level of resistance here. 65.25 is the major point of control, and that's more or less where we are at right now. So this would be a real tell, really important chart to watch. with this resistance. So if the Footsie futures can get above there, I might monitor this in the pre-open next week as a key chart. But if the futures can get above that level, it puts this chart, really important chart, in a strong position. To show you where that point of control was built, if we just scroll back here into period across 2013 through 2015, from this low here to this high, that level that we're looking at came right in at the halfway point, and there's a kind of bell curve thing going on there. So going forward, that level is still the major, and that's where we are right now. So this is significant resistance for this chart. My version of the Ridex assets ratio is in no hurry to climb. It's still at 4.7. As we know, last 3 days a terrific rally, and this very slow to respond. Here from the pre-open, we can see the ratio is almost unchanged at 4.7, and the highest ratio since very early this year was reached on the 26th of April, and that's at 5.27. And that was at this point here. So if we see the ratio exceeding that level, up around 6 or something, it would be the highest since the start of the year. Just relative to that time period, it might indicate a little over-enthusiasm. But right now, markets rallying, and the Ridex traders are not jumping in here. I talked about the level of the Ridex bull fund assets in isolation over the last few weeks. This blue line here representing a level of bull fund assets over the last few years that has tended to indicate fuel and a kind of reversal. So they correspond, when the ratio drops below that level, it tends to correspond to market lows. And if we just zoom in on that indicator, you can see earlier in the week the bull fund assets reached their lowest level since late February, and that marked the low. Here's the rally. Should these assets in the bull funds start to climb, that level there would be interesting if exceeded. That's the high back in April and the highest level more or less this year. So we can see in the Ridex ratio, public not really involved at the moment, and back in the public poll over here from AAII, some significant readings recently. Just 4 weeks ago, the bulls percentage reached an extreme low of just 17.8%. That was the lowest bullish sentiment since 2005. Climbed up from there this week. Bulls percentage came in at 28.9. It's up from 22% last week. Bears percent was slightly lower this week at 34.4, and that's down from 37.5% just 2 weeks ago, and that was a 17-week high. Nothing in this indicator at all to suggest the public are bullish. However, in the Investors Intelligence poll last week, we noted that the 4-week moving average of net, which is the bulls minus the bears, the black line, is the 4-week moving average. It's lower this week at 22, but we noted previous week it reached 23, and that was the highest since August last year, and it broke above the May high. So right here, that was the most bullish, to my way of viewing things, that the poll had been since August last year. So we've seen the sell-off, and you can see the decline here with the bulls percentage down at 41.6 from last week's 47.5. Not much change in the bears percentage. Interesting that this chart, or this indicator at the bottom here, which is the Lipper US fund flows, it's the 4-week flow number here in black. It's a very similar shape to that poll from the AAII. Lipper US fund flows are reported equity fund, including ETF, outflows this week of 6.8 billion. The 4-week flow number is a negative 17.15 billion. Relative to recent measures down here and here and here. It's not extreme, but it's pretty low. This is TLT, the T-bond ETF. You can see the previous high for this chart over here, early 2015, and we've just exceeded that up here and holding above that level. So this is kind of a breakout that's attempting to consolidate, which is usually bullish. Lots of gaps in here, and an extreme move after last week's Brexit referendum and the shock of that. But actually bonds holding up here at the moment. Gold has also been a bit of a safe haven play recently. So in the few days leading up to the EU referendum, when the expectation was for a Remain vote, we saw gold coming back here, very much in line with the sentiment and the opinion polls in the UK. And then when the shock result, we've spiked up here And like bonds, this safe haven play is actually out at a new high today, so there's enough demand here, possibly concern over whether this rally in equities can actually hold. And we're seeing gold pushing up to a new high today. Previously, the point of control on the United States Oil Fund, USO, was down here at 1078, and that has just yesterday migrated higher. It's now a 9-month, and it's 1170, and currently we're seeing this fund printing below that level. I think this is an interesting development based on a half-hourly chart. You often see a point of control move, and then we get a kind of directional move starting. So currently I'd call this weak price location. So USO needs to spend some time a little bit higher to put itself back in a strong price location. Dollar index currently holding above 95.25, its 2-year support. Talk about the Euro FX chart each day in the pre-open. This half range level off the low over here last year to the high. We're just holding above that at the moment, which puts it in slightly better price location than a few days ago. Obviously an important chart to monitor at the moment. I'm not happy about the long side unless we can print some time back above 113.13, which would be up here. Finally, I want to talk about the chart that's caused all the problems. This is the pound against the dollar, or anything related to the pound, the yen. We've seen this just sort of historical collapse in the price here over the last few days from the end of last week. And unlike the equity market in the UK, we've seen very little upside here. It's printing in a range, and none of the economic news this week has been of any help at all. I'm just concerned about this chart. I think it might cause some more shocks. I sometimes do this. I've created a 5-minute chart for the pound dollar within Market Analyst. I'm just following the just the controlling price over the last few days, just to see if that shifts. It did have to actually shift from this level here down to 133 dead. As it's based on a 5-minute chart, it can move around pretty quickly. Currently it's at 133. Might monitor this again in the pre-open. So I'm back in the live chart. We're looking at a shorter time frame, and there's that level at 133. Here's the halfway point off the low. That was the low of the decline, and the subsequent rally ended here. So we've got a halfway point here. We've printed very little time above that since the decline below it. That's not particularly encouraging. We're now printing below that level, so again we need to monitor this. If we see a continuation of this chart printing below that level, then I usually assume a retest of the low, and that might cause some problems. So that level and the 2087 on the emini futures going into next week, the most critical chart levels to follow, I think. Okay, that concludes. Once again, I wish you a good weekend, and thank you for watching.